All right, hello again, everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. Over the past number of weeks, we've been taking a look at a lot of different credit spreads for these videos, and they've worked out really well for us. I'll cover some of the most recent trades at the end of this video just to show you how we're handling those. But we've seen a market that's been very active. We've seen a lot of volatility. The VIX got up into the upper teens, low 20s, and that's a prime environment for the credit spread. That's why they did so well for us. Over the past week and a half or so, they have pulled the volatility out of the market. The market has resumed its uptrend. In fact, we actually got very close to all-time highs here this week. Because of that, when the volatility gets low, the options get pretty cheap. We have gone from an environment that was prime for the credit spreads when the volatility was high, that worked out really well for us, to now that volatility is low, we're going to shift our focus away from the credit spreads this week and look at a debit spread. It doesn't mean I'm completely going away from credit spreads altogether in my own trading. We're still using a lot of them with our students and myself personally. But I want to show you the flexibility that options give you. There are a lot of things that we can do to adjust our approach to take what the market's giving us. Now, why would I look at a debit spread versus buying a long put? I'll show you that in just a second. A lot of it has to do with the cost savings. So we're going to take a look at a debit spread today on Costco, symbol COSD. This is one of the most impressive names in the market, and it's been so all year long. It's been on an incredible tear to the upside. Just over the past week or so, we have finally started to see Costco roll over to the downside. It hasn't been anything significant yet, but we're starting to see some selling kick back in. Enough to where I'm looking at a bearish position going into next week. Now, why am I looking to be bearish here? If you take a look at my sentiment indicator down at the bottom, it's the green and the red histogram. We went from green to red here just over the past couple of days. That has me going from bullish to bearish mode, but it's not enough to just triggering me into a trade right away. I have to wait for confirmation. And the confirmation comes from price up top. I'm looking for a certain sequence in my moving averages. You can see the red and the blue lines. And then I'm also looking for price action to get down and touch my pink dots there. That is my entry point, and that entry point was at 289.15. That gives me the green light to put a position on. That is the basis for this trade. Everything that I'm looking at here technically backs up looking for a pullback. That does not mean I'm expecting Costco to collapse. I'm looking for a nice healthy pullback over the next couple of days on out to the next couple of weeks. If we go out 6 months from now, who knows what Costco's going to do? I mean, it's been such a strong stock. I would not be surprised if long-term it continues to move higher. I'm not concerned 6 months from now. I'm concerned with the next couple of weeks. And that's what we're looking to take advantage of with this week's trade. So let's jump over to the trade page. I next have to decide what expiration cycle do I want to go with. I've got a bunch of different weekly options in here. I've got the October monthly options with 35 days left. And our choice here depends on how aggressive we want to be with this trade. The closer we get to expiration, the more aggressive the trade becomes. The options are cheaper, which seems like, hey, why is that more risk? It's more risk because those options are more sensitive to changes in stock price. Higher risk, higher reward type of scenario. If I go out to the October monthly options with 35 days left, even though I'm going to pay more for those options up front, it's actually a more conservative trade. Okay, and I'll walk you through that in just a second. So I decided to go with the October 11 weekly options. Those are the ones with 28 days left. I wanted to go with the puts. Now, why wouldn't I just buy a long put here? The problem here, if I go to the 292.5 put, they're over $800 per contract. It's expensive. We've got a nice profit potential on that, but for a lot of retail traders, it's difficult to have $800 tied up in one trade. You're just not able to get the diversification that you need. What we decided to do is right-click on the 292.5 put, go to buy, and select a vertical from the drop-down list, and that's going to pop up an order down at the bottom. Now, I played around with the strike prices here a little bit. I still want to buy the 292.5 put, but now I'm also selling the 285 put at the same time. It leaves me with a debit spread. And look what it does to the cost. I go from over $800 to buy the 292.5 put. I cut that risk all the way down to just over $300 with the put spread. It's still a bearish position. I still want Costco to move lower as quickly as possible, but I'm really able to cut the cost of that trade considerably. Where's the trade-off there? If I cut the cost, what am I giving up? Well, I'm giving up the profit potential that I'd have with the long put. The long put has unlimited profit potential. As long as the stock moves lower, I get to make money. with this trade here, if I get filled just over $300 per contract, it gives me a profit potential of $447. If this thing does completely fall out of bed, the most I can make is $447. So now I'm defining the parameters on the trade. I'm defining my profit potential. I'm defining my risk. Not a bad trade-off. If you're a smaller retail trader, regardless of account size, it's a great way to put on a slightly more conservative trade, right? So I'm risking $303 to make $447. Ideally, I would love to have the stock go down to 285 or below. Anywhere below 285, we'll be able to reach that max profit potential. The trade is good for the next 28 days. The sooner this move happens to the downside, the better. Unlike a credit spread like we talked about in weeks past where we had time decay helping us, the time decay is hurting us here. It's like holding that ticking time bomb. We're okay as long as the stock moves quick enough in our favor. Right, so the target on this one, I'd like to see the stock below 285. I'd love to come in and get as close to that $440 profit potential as possible on the position. So we'll track it over the next couple of weeks. I'll certainly let you know how we're handling it. It's a great position regardless of account size, regardless of your experience. It does give us a bearish position there, which I really, really like going into the next couple of weeks, just given how overbought the market is. If you have any questions on the Costco trade, certainly let us know. We'll continue to track it here on the blog and in YouTube. If you have any questions on this trade specifically, you can also email me, mike@netpicks.com. Before I wrap up the video, let's take a look at some trades that we were talking through in previous weeks. Let's talk through Roku here first. This is actually a trade that we just talked about last week. And we talked about how overbought Roku was. Okay, we looked at the chart. It was at an extreme, certainly, and we looked to be neutral to bearish on this position. And we sold the 175, 177.5 call spread in the September 27 options. Okay, so I'm going to go to, and I actually have to load up a lot more strikes here because the stock has moved in a big way for us here this week. Let's see if that's enough strikes. There we go. So we sold the 175, 177.5 call spread, and we did this trade initially, and we collected 95 cents up front to put the position on. That's the most I can make on the trade. We ended up closing this trade out for 24 cents here earlier this week. Why did I close it out? My target on any type of a credit spread is when I can buy the trade back and keep 75% of my maximum profit potential. It gives me a set of mechanics that I can trust, that I can stay disciplined to. That's exactly what we did, and we booked a $71 profit per spread. Okay, really, really nice trade. We were only tying up $150 of capital to begin with, and we booked a $71 profit on that position. So really nice trade there on Roku, and that trade is now completed. If you did not close the trade out, you still have an opportunity to do so now. You actually can get filled at a better price than we did. It's now trading for 10 cents, so you can book a really great profit there going into next week if you wanted to. UAL is another one that we had on. Go ahead and load this trade up. This is United Airlines, and I want to make sure I got the right trade here. So it's the September 20, and we sold the 83.81 put spread. And when we did the trade initially, we collected 51 cents. This one's now essentially trading worthless. We are looking for a move to the upside. UAL has done exactly that. We actually closed this trade out for 16 cents. Okay, so it gave us a $35 profit per spread. It was tying up $150 of capital. So again, really nice trade there. Booked the profit, freed up the capital for the next trade. So another winner there booked on UAL. Netflix. This is a trade. I can't actually show you this one because the options already expired. They expired last week. But on Netflix, we sold the 292.5, 290 put spread for 77 cents. We closed it out for a partial loss. It ended up being about a $15 loss per spread. So unfortunately, we didn't get the move to the upside that we needed on Netflix. I still like the upside in Netflix, and we saw a nice rally here earlier today, which is great. We just ran out of time. So unfortunately, on that one, we took a small loss. Target. Go ahead and look at TGT. This is a trade that we still have on. On Target, we have the short call spread on the September monthly options, the ones with 7 days left, and we sold the 107, 109 call spread. So we've got some work to do on this one going into next week. Right now, the price of the stock is at 108. I need a dollar sell-off over the next 7 days. It's still very doable. I'm not overly concerned yet. We don't have to take action yet, but we certainly need a move lower into next week. We collected 68 cents on this one. We've been dead wrong on price so far. I mean, Target's been super strong since we put this trade on. We've been dead wrong, and we're only down on this trade between 35 and 40 cents, so between $35 and $40 per spread. If this thing can get back down below, on this one, below 107 next week, we'd be right back on the dance floor. So nothing needs to be done. We're going to continue to hold it. We'll take a closer peek next week and let you know what we end up doing on Target. And then finally, on DIA, we have an iron condor that we talked about here a number of weeks ago. Looking for more of a neutral sideways move on the Dow. We've actually had anything but. I mean, the market continued to plow its way higher. We sold the 268, 270 call spread and the 250, 248 put spread, and those options expire next week. We need some help here, certainly. We sold this one initially for $1.08. It's now trading for $1.69. So we are down money on this position. What do I need to have happen? I need this thing back down towards 268. So we do need a decent sized sell-off going into next week. This is one that, may not necessarily give us a full profit, but at this point, any type of a move lower going into next week would allow us to limit the damage. It's a risk-defying trade. I know what my maximum loss is right up front, so that helps. Right now, we are down on this one. We're down about $60 or so per spread. So it's still a relatively small loss, but definitely need some help. With the price action up around 273, we need a $4 or $5 sell-off going into next week. Is it possible, given how overbought the market is? Yes. We do have some big news next week. We've got the Fed out with their interest rate statement. The potential is there, but we need it to happen. So we'll keep you posted. If you have any questions on these open trades, if you've got some of these positions on saying, hey, how do I handle these next week? Feel free to send me an email, and I'm more than willing to get in touch to help out. Mike@netpicks.com is the email address. All right, so I'm going to wrap this video up here. Enjoy your weekend, everybody. I'll be back again with you next week with our next trade of the week.